Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. On today's episode, we'll check in on U.S.-Japan relations as the Biden administration's time in office comes to a close. We'll be hearing in a moment from U.S. Ambassador to Japan, Rahm Emanuel. But let's begin with markets. In the States on Friday, economists at some of the big banks in the States began reducing their forecast on the number of Fed rate cuts after that blowout jobs report. In December, the American economy added the most jobs since March, and the unemployment rate fell unexpectedly down to 4.1%. Joining us now is James Abate. He is Managing Director, also the CIO at Center Asset Management. James joins us from here in New York. Thank you for taking the time to chat with us. Happy New Year to you.
Happy New Year to you, Doug. Thank you.
I was struck by the fact that Bank of America, among the big banks, no longer sees any rate cuts this year. Do you think that's overdoing it just a bit?
I think so. My belief is that the Fed has been really following the market. And if you look at 2-year Treasury note yields at this point in time, they're about 25 basis points lower than where the Fed funds rate is today. So our expectation is that the Fed will move one more time, 25 basis points, and then, assuming no other surprises in terms of information, see the Fed actually just stay at that 425 level for the foreseeable future until they see Trump policies come to fruition. And what you really need to see is a continuation of the labor market remaining stable in this type of environment.
I think it's fair to say that the equity market is looking at the longer end of the curve right now, and that 10-year was up to 475 Friday. As we get closer to 5%, is there a question in your mind as to whether or not we could see maybe some corrective behavior on the part of the equity market?
It's possible, but let's put everything in perspective. I mean, just because there's stronger growth in the services side of the economy, let's not forget that the ISM manufacturing index has been in negative territory for over a year now. So we have a dichotomy of fortunes between the manufacturing sectors and the services sector. And going back to your point with regard to long-term bonds, I mean, the move that we've had in yields has not been driven by inflation per se, but really a normalization of the term premium, or simply the spread between long and short-term rates. I mean, 80% of the recent increase in Treasury yield has come from those rising term premiums. So I think despite the hysteria, I mean, the term premium right now is still below the normal 1% to 2% that existed from the 1990s. The global financial crisis. So I think when you look at other areas, credit risk premiums and equity risk premiums are low. But at this stage, markets are priced for perfection, both in credit and equities. But I don't think the long-term bond market, Treasury market that is enough yet to basically crystallize any type of significant ramifications on the order of, let's say, a 1987 crash or things along those lines.
We're going to be hearing from some of the big banks this week. They'll report earnings, Citigroup, Goldman Sachs on the list. How do you think the yield curve, in the way that it's been adjusted lately, is going to impact the results of the big banks?
Well, that's the point. I mean, obviously, it's the big move that we've had in this term premium rising has only occurred over the last several weeks. But when you look out further, I would expect that the net interest margin expectations or forecasts by many of these major banks is actually going to be quite healthy. And that's going to go a long way to let's say, offsetting the continuing credit problems that we're seeing in the commercial real estate and some of the emerging issues which are starting to bubble up in certain segments of the consumer. So overall, when you look at where we are, I think Chairman Powell has done, and to be fair to Chairman Powell, I think he's done a reasonably good job, and he's targeting back to getting monetary policy to the levels where it was back in the 1990s with stable inflation, stable term premiums, and, more importantly, with regard to, the unknowns with regard to tariffs and other Trump policies, the way the executive branch is now, I mean, the executive branch has unilateral authority to implement tariffs. This is not something that needs to go to Congress. So he has to be aware of, shifting policies that can come out of the Trump administration any day.
So if they come to fruition, is it more likely that the net impact is inflationary?
We have to get out of the mindset where growth automatically equals inflation. And, the argument about whether or not, tariffs are inflationary, is not yet rooted in economic science to a certain degree. And I think, one of the key things that we have to look at is potentially the contradictions that we're going to see. I think one of the things that we always have to be aware of is, if Trump is genuine in the sense that he wants to have labor reclaim a share of economic wealth, like he did with just siding with the recent longshoremen's union strike because of automation. Obviously, that's bad for corporate profits, and it has a negative impact on inflation. And, from that perspective, what we have to really look at, I would say, in terms of a guidepost, in terms of inflation and markets and other things, I think the key thing to watch is Trump's relationship with the nominated Treasury Secretary, Scott Bessent. He's a very thoughtful, conservative, and not impulsive guy. And if that's the phrase, I think that's bad news for financial assets and stock markets in general.
So we had some news over the weekend. The deadline for Nippon Steel to abandon its bid for U.S. Steel has been extended. CFIUS, the Committee on Foreign Investment in the U.S., has given the companies now until June 18th. And then I saw a report in the Nikkei indicating that Prime Minister Ishiba is planning to visit the U.S. in the first half of February to meet with then President Trump, and they may end up discussing this Nippon bid for U.S. Steel. Is it too soon to talk about the possibility that this deal may get done?
I actually, after I saw that news, it crystallized in my mind that the deal indeed will get done. Japan is just too important of an ally of the United States. Furthermore, the deal makes a lot of sense. The only other alternative is either to just let U.S. Steel continue to operate, and they don't have the capacity to modernize many of their blast furnace mills. The other is transaction with Cleveland Cliffs, which would basically give, in essence, a monopoly to old school steelmaking in the United States to one company who doesn't really have the same financial resources and the commitment to capital investment that Nippon does. So I think at some point we're going to see this deal get done. It's obviously been enmeshed in the political fight that we've seen between President Biden and President-elect Trump, both of them wanting to obviously side with union against a foreign purchaser. But at the end of the day, the deal makes sense, and Japan is too important of an ally, and I think the deal will get done.
We were talking a moment ago about tariffs, obviously many targeting China. And then there's this issue with TikTok. The app, as we know, is set to be shut down in the U.S. next week. Last Friday, the Supreme Court seemed to signal it is unlikely to grant a reprieve to TikTok from that U.S. law banning the app unless it is divested on the part of its Chinese owner, ByteDance. What do you think the road ahead is for U.S.-China relations?
I'm not sure. And the reality is the majority owner or the controlling owner of TikTok is not a Communist Party member. I don't really have a strong opinion on how this is going to shake out. I think, if it was up to me and I'm an old person, maybe just put a simple warning that if you want to become an imbecile watching TikTok videos all day, God bless you. And that's enough of a warning for people to avoid TikTok in itself.
What about in terms of the impact on U.S.-China relations? I mean, obviously, we were talking about the tariffs a moment ago. Do you think that this is going to be 4 years now as Trump comes into office of further decoupling between these two powerhouses?
It's going to be interesting because what we have to think about, right, is that with regard to the point that we raised before, with regard to labor reclaiming a greater share and capital investment back into the United States, I mean, the reason why we've had, and you always have to go back to this, the reason why we've had an unprecedented bull market, since the 1990s, and, really, significantly since China's ascension into the WTO, is the fact that labor share of income in the United States has declined significantly, as have tax rates as well as interest costs. So, this is the real key with regard to contradictions that we'll see out of President Trump, because, as both know, I mean, he measures the stock market as his barometer of success. And to the extent that, inbound investment, higher labor costs are not good for stock prices per se, I think that's going to basically be a governor on how aggressive he will be with regard to tariffs in China, and recognition that, again, he needs also inbound investment. And I think we'll likely see some type of, middle ground akin to what happened with Japan in the mid-1980s, whereby you'll see more inbound investment in the United States by Chinese companies to complement, not to substitute, but to complement some of their own export activities.
Great insights. James, thank you so much for being with us. James Abate, Managing Director, CIO at Center Asset Management, joining us here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. The U.S. ambassador to Japan, Rahm Emanuel, will be stepping down from his post, and he will return to the U.S. January 14th. As his time in Japan comes to a close, he joined Bloomberg to reflect on the current state of relations between Washington and Tokyo. Here's Emanuel in conversation with Bloomberg's Sherry An and Heidi Stroud-Watts.
So how are you feeling?
A sense of accomplishment, also a sense of it's been 3 years almost to the day. Got a tremendous amount of setting what I believe that the relationship has been reinvigorated, re-energized, and reformed and better prepared for the future. And you hand your baton off. But at the same, as I jokingly say, while it's been 3 years, for the Japanese, it's felt like 30.
And you've actually said that. You said at the start of your tenure that the next 3 years would be very consequential for the next 30, right? How much has been achieved and how much more could have been achieved? Are there any areas that you would have liked to have done more?
Well, look, I mean, you hand off the baton. It's not like you run a race and you hit an equilibrium and there's a finish line. The question is, where was the relationship beforehand? Where is it when you exit the stage? And I think as a totality, whether you look at diplomatic front, the two trilets that we've created with Japan, the United States, Korea, Japan, United States, and the Philippines, you look at the security arrangement, the cooperation, the type of exercises we do, and integration of our forces, everything has been re-energized and reinvigorated and better prepared to reflect a credibility of deterrence to China and to North Korea. Take one example last week when North Korea shot off another ICBM. Both the Republic of Korea, the United States, and Japan were sharing intel in real time. Just one manifestation of a reflection of that didn't exist 3 years ago. In the same way that the President of the United States and the Philippine President and the Japanese Prime Minister had a conference call and discussing maritime issues in the South China Sea. That kind of coordination didn't exist. And one of the things I think also changed, in a subtle point, a lot of times when you think of deterrence, you think about battleships, missiles, planes. Having a trilateral with Korea, the United States, and Japan, or one with the Philippines, Japan, and the United States, that also is deterrence, because China's whole strategy is to isolate X country. Through our multilateral strategy and our lattice work, China's the isolated party in their own backyard.
We have seen the first administration of President Trump, though, how he engaged with these rogue nations, including North Korea's Kim Jong-un. Is that going to be a threat to everything that's been built so far?
Well, I hate using sports metaphors, but let me try this. One is that the Indo-Pacific is a home game for China. It's an away game for the United States. You want to level the playing field and level the competition? You have allies. The one thing China doesn't have anywhere in the world, and specifically in their own backyard, Australia, Japan, Singapore, Korea, Philippines, India, they do not want to untether to China. They want the United States anchored here. That's a huge strategic advantage for the United States. We can project our deterrence, the credibility, so China doesn't try to do something either through economic coercion, political coercion, or military coercion.
Ambassador, you mentioned a number of countries that have vested interests in this, right? Do you think for countries like Australia and some of the other, middle nations around the region, is the alliance, a sort of counter-alliance, strong enough, or do you think there needs to be sort of more of an effort to work cohesively?
Well, let me say this, Heidi, on the question is, you don't hit an equilibrium and that's it. It's a work in progress. You're always improving. You're always strengthening. You have reciprocal agreements now between Japan and Australia that didn't exist before. You have 12 Coast Guard ships from Japan with the Philippines. Another 5, I think, or 6 are on delivery. You also have radar. You constantly moving and improving your deterrence and the credibility behind your deterrence and the effectiveness on there. I do think When China began its wolf warrior strategy on the diplomatic front and its economic coercion on the economic framework, all the countries in the region realized and woke up to the fact that this was not a benign China. This was a China that was determined to crush their own sovereignty. That has helped, and the United States under President Biden has effectively used that threat to organize the region of like-minded countries that believe in the same set of principles to coordinate both their security front, economic front, and their diplomatic/political front. And that's been done in an enhanced level. And now, in China's own backyard, and they realize this, they are the isolated party because of the mistakes they have made and the policies they've adopted that have woken everybody up. This is not a China that talks about win-win. The only thing they know is they win, you lose.
The new Ishiba cabinet, we have a whole different political landscape here in Japan as well. They're going to be meeting with the new president, incoming President Trump. How do you expect that relationship to shape up? And
I'd be the last person to ask that question.
I mean, I'm really curious about what sort of chemistry we can expect. We saw the whole chemistry with former Prime Minister Abe and President Trump, and you have seen how governments here, officials, interact in Japan. Do you expect that? And I guess a follow-up to that is, would that have positive outcomes for the now delayed U.S. Steel, Nippon Steel business relationship?
Well, here's what I think is, it's not wrong to look at the two heads of state. As I saw firsthand, President Biden and Prime Minister Kishida have an incredibly warm relationship that helped push both leaders farther than their comfort zones. That said, one of the things that people lose sight of in the question, Japan has huge support on the Hill, Democrats and Republicans. And having been a congressman, having been a chief of staff, that has an impact on the construction of a national security vis-a-vis a country. Heads of state too, but do not lose sight. There's two countries that have huge bipartisan consensus. China on one side, Japan on the other. And that will have a big impact because by just one reference in the last 3 years, there have been 180 plus members of Congress. 2 speakers have come through Japan. And then second, you've had 30 governors. You've had an immense direct investment from Japan into the United States, as well as the United States in here. So you have 30 governors who have a vested economic interest in good relationship with Japan, and you have 180 members, both House and Senate, DNR, who also want to see our ally fully integrated into our strategic framework. Is that more
encouraging towards the Nippon Steel, U.S. Steel deal?
Well, look, here's one thing I would remark to everybody. And I think it's really, kind of important. One is the relationship is much deeper than a single business transaction. 5 years ago, Japan had the same words around Toshiba. Second, the United States, 4 months ago, awarded a Japanese company $20 billion contract to replace all the cranes at our ports and get the Chinese cranes out. Second, Japan is the only country that produces also co-production on the Patriot PAC-3. They've also a series of other weapon systems. Nothing speaks more to trusted ally than those examples. So is there a single economic transaction? Toshiba 5 years ago, relationship still strong. You look at the Nippon U.S. Steel today, the relationship is more complex and deeper in the roots and friendship than just a single economic transaction.
Ambassador, it was really great speaking to you. And thank you very much for always joining us and always being open to conversations with us. U.S. Ambassador to Japan, Rahm Emanuel.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.